Good day, everyone. Well, before I get into the matter of the day, I wanted to mention something about housing prices. A lot of people think they've got to tumble along with everything else in a recession. Now, based on history, this would be true if the recession was one of great magnitude, such as the one caused by the great collapse of 2008, known as the Great Recession. Or you had the one in the 1930s, of course, that's the Great Depression. But during other recessions of lesser magnitude or duration, home prices dropped only for about a year or so and then quickly stabilized, after which they either continued higher in their long-term uptrend or maybe moved sideways for a couple of years before resuming their long-term uptrend. This would have happened after the bursting of the 1990 housing bubble. Back in 2020, even the C-19 pandemic, which caused a short and sharp collapse in early 2020, pushed everything down massively for a month. But that only caused home prices in the US to dip slightly in May 2020, and in the EU, the dip was in March of 2020. So indeed, home prices can continue to appreciate even during recessions, though their price ascent may flatten or slightly dip, as recent reports suggest. Now, that said, in the current bubble, home prices have been on their steepest descent in decades due to the record levels of M2 created from QE. So it's possible, when combined with a severe recession, that home prices could have a steeper than normal drop for a year or so until the Fed halts the hikes or launches QE5. Indeed, mortgage demand is at its lowest since the year 2000, while supply is up since 2019. We are also seeing more price reductions in several years. So in consequence, home sales, they were down 16% in June, and the average home price in the US fell 12% over the last 2 months, and that was the largest drop in history over such a short time frame. Housing industry groups should therefore continue in their downtrends overall after this dead cat plays out, along with most everything else. And though I would say one could look for any names that are bucking the overall trend, as we've said, gems can be found in bear markets because they're bucking the trend. Maybe they're going sideways or they're not going down as much, and then they're the first to rally off lows once a major low in the major averages is found. Now, I don't see any gems yet in housing, but low risk plays can arise. There is a company with ticker symbol O. O is an Oscar, and that's Realty Income. They're a retail right, and they're trying to buck the trend during this bear market, but its alpha is very low, so it's probably going to put most alpha traders to sleep. Now, housing cycles are some of the longest in duration of the asset classes, as they tend to last for well over 10 years. We've got the one from 1971 to 1990. And yeah, where housing did actually rally in the 70s. And then we've got the one from 1993 to 2006. And both of these prior cycles were called bubbles. And we are still in the current bubble as home prices recovered after the financial collapse of 2008, but then started into their ascent in 2009 to where they are today. So basically, we've got a 20-year, a 15-year, and the current 14-year housing cycle. And even the bursting of the dot-com bubble in early 2000, these caused price volatility in homes, but you will notice in graphs I'm going to send out on what home prices actually did over these decades, you'll notice that post dot-com bubble, it was 3 steps forward, 2.5 steps back, so homes were still going up in value over those years, even though the markets were getting killed. Now, speaking of which, the CPI came in 0.2% below expectations. That includes core CPI. And many are wondering when the Fed's going to indicate they're going to halt the hiking of rates. The 2- and 10-year Treasury yield spread, which is a great harbinger of recession, was also just the most negative since the dot bomb bust in the year 2000. Even with inflation tamer than expected at 8.5% and a core of 5.9%, we're nowhere near the Fed's target 2% rate. So Since rate hikes take time to affect the economy, the worst of the recession may not be sometime until the middle of next year. The CME Fed futures are predicting 3 more rate hikes for this year. These numbers, I'll have to check again, but it was 75 basis points when they next meet, then another 2 25 basis point hikes. And that would bring the Fed funds rate to 350 to 375. But with debt at current levels, and these are record levels still, rates cannot get to the Fed's targeted 3.6% without greatly upsetting markets due to the debt service, which impacts GDP. Back in 2018, as the Fed continued to hike rates, markets finally started into a sharp downtrend in late 2018, and that culminated in the first Christmas crash on December 24th, that day being normally a sleepy and mildly bullish trading day. The Fed chair immediately went live telling markets what they wanted to hear, that balance sheet tightening would be put on hold, and that was the major low for both stocks and Bitcoin. So I believe we will see a rhyme of what happened in 2018 later this year, given that central banks remain in a tightening phase. The Bank of England raised rates by 50 basis points to 1.75% the other day. That was the largest increase since 1995. The Bank of England also predicts its CPI inflation will peak at over 13% by October. So it hasn't peaked yet for them. And that said, in the US, M2 has been sideways all year, which explains the bear markets in both stocks and cryptocurrencies. The idea that the Fed can materially reduce M2 goes against hundreds of years of market cycles. Ultimately, the Fed will have to stop the hikes or they will crash the markets. Eventually, QE5 will launch due to a new crisis or some nonsense and costly political package such as the Inflation Reduction Act, which actually increases debt in the long term as it subsidizes uneconomic clean energy and clean agriculture, spurring inflation while increasing taxes on individuals and corporations. Indeed, it doubles the size of the IRS as 87,000 new tax agents will be hired to handle 1.2 million new audits a year, with the majority targeting those who earn under $75,000 a year. Uncle Sam is getting even more ornery in his old age as the government is broke and couch diving for change. Gil, how are you seeing everything?
Couch diving for change, huh? That reminds me of what Bill used to do when the market was really hot. He would turn the couches over in the lobby of the office looking for money.
I remember that. Yeah.
Throwing every last penny. That was a joke, you know. And market got really gets. Better watch Bill. He's going to head for the couches in the lobby next. But so where are we? We're still in a bear market rally, I think. Year over year, CPI is still 8.5%. So you're a long ways away from the Fed's target of 2%. But the market's going to have its fun, and I think you've got everyone piling in now. But the problem is, there's really nothing to buy. I'm certainly not going to step in and start buying stocks that are extended at this point. Interesting thing was this morning, right off the bat, if we look at my 620 chart, I put some shorts out right at the open, and boom, this one broke. And then of course it bottoms. You get a cover signal, and it turns back to the upside. So you can take that. Also another one, CCJ. Broke hard, and it's not really doing much anything. Sunrun is another one. These solars have been rallying. I think on the news of the clean energy, 369 billion they're going to throw at clean energy. But that was another one that was a great short right at the open. And then you get the cover signal down off the lows, and so it becomes a hit and run kind of morning. And now here we are coming back up to the highs, where it's possible these could become shortable again. I mean, that's mostly what I want to do here, is stock the short side, because I don't think I want to be chasing patterns like what you see here with Sunrun. But there's that one. What were the other ones? Even this one was worked out right off the bat, just like boom, they broke it hard a couple of times. But now it's kind of edging higher, probably pushing into a shortable area. But that's pretty much what I'm looking at. So when you look at the indexes, you have a gap up in the NASDAQ to Monday's high. And the S&P you're going a little bit further, probably because they're viewing the Fed, like the Fed's going to be on hold, you know, because inflation is only 8.5% now year over year, the way they measure it, which means it's closer to 15, 16%. But that's what you got. So you're gapping towards the 200-day line. We thought you could have a bear market rally that pushes all the way to the 200-day line. You're not there yet, but we're getting closer all the time. But today, let's just look at a few things on my HGS Investor. Retail is moving pretty well today. So but you have stuff like this. This is the biggest mover in my retail group, Blue Apron, and you can see for the most part, you've got rallies going on today. But where's the beef? Really, the patterns. There's Wingstop. Maybe that was one to buy earlier, but you can see that's extended. And most things that are up are extended, and otherwise they're kind of hanging out down along their lows or within bear flags, and there's nothing really decisive in terms of new bases within, say, 10 to 15% of their 52-week highs. I mean, that's the one thing I would look for last week. I was talking about how right now in this market, you don't have any real leading stocks that are setting up in bases within 10 to 15% of their highs, which is normally what you see when a bull market starts, a real bull market. And so a lot of times we'll be buying ahead. I remember in August 2010, Chris, I don't know if you remember, we were in New York, and we were there for the Traders Expo and also to promote our new book. But I went on Fox, and I think you were on CNBC, but everybody was pretty bearish. But at that point in time, you didn't have a follow-through day. Everybody was pretty bearish, but a lot of stocks were setting up in bases. That was one thing that you noticed heading into August. And so when we turned out of August, the market followed through and we had a nice rally from there. But that's what I look for, and I don't see it, okay? So I can't get excited. I know people want to get excited and start buying, quote, leading stocks, but there aren't any leading stocks. And anything that breaks out seems to get slapped right back into its base. If anybody sees a great leading stock breaking out of a base or forming a very constructive looking base, feel free to post it on the questions for the webinar. But I mean, I'm stalking the short side today. So continuing through my retail group, and what we can do this exercise here, because this is what I do every day. So and I did put out shorts. SunPower 2556. CLF 1970. So now we're coming in 1967. I'm seeing, okay, just a pinch. If they go down a lot, I will not have shorted enough, but that's the way shorting works, I guess. But in any case, Gilmore's law of shorting is no matter how far down your stock goes, when you cover it, it will go down another 5% just to piss you off. And if you do short a stock, if it breaks hard, you probably didn't short very much. So, it's never perfect, but you'll take what you can get. So yeah, these are starting to roll over now pretty nicely. I don't know. I might think about going long the skews here too. Look at them pushing off the lows. Let me get to that. But you see like Ulta, right? Ulta Beauty into the 200-day line. These are retailers. Some of these like Chipotle, pushing, I don't think that's a higher high though. See, most patterns, they look like this. So you're way off the highs. And that's what I'm saying. Yeah, you can look at something like this. That looks really good, right? But if you look at it here, it's not really anywhere near its 52-week highs. It's got a lot of work to do to get there. But let's see here. And you can see for the most part, that's what we've got going on. So I would make the main point is that things are a bit too extended to start buying now. And I'm feeling like I want to stalk the short side. So I'm back on SunPower here and also CLF. I should be hitting run here. I'm thinking, let's take a look at this real quick. I don't know. You could end up running and covering too on these as well. But you can see Sunrun, it broke down hard. You're coming back up towards the prior highs. You're stalling a little bit on the candlesticks here. You can see that a little bit churning, and watching this MACD here, which is starting to flatten out just a little bit. Not really getting that extended and stretching away from the slower blue line. So this could come into play here. I'd be watching this here as it continues to rally. But I don't really see what the big deal is with solar. A lot of these companies are infinite PE stocks, Sunrun being one of them. So, they're going to have this great business thanks to the clean energy subsidies. So more corporate welfare, just what the country needs. In the Inflation Reduction Act is what they called it, right, Chris?
Yes, that's right.
If you want to know what a government bill is not going to accomplish, just look at the title. So, Build Back Better or Inflation Reduction Act. I mean, it's almost comical, but whatever. Anyways, so let's look at Go ahead. What?
They're sinkholes.
Yes, exactly. But you look at semiconductors, this group was hot, for a while because they're getting subsidies to build more plants and everything. But they all got clocked yesterday because Micron came out and said what NVIDIA said on Monday, which is that business is slowing down very fast. And Micron said, the CFO said he was surprised at how fast everything is slowing down. And that's really the conundrum here, because you still have 8.5% inflation. I mean, today's number notwithstanding, everybody's all excited, drooling all over themselves. I think it's a little bit premature, but it's a bear market rally. So bear market rallies always go further than you think. That's just the way they are. Let's see here. Let me check a couple of my positions here. Let's see. Okay, I'm just hanging. But you can see semiconductors were hot and then they're not. And so if you buy them too high and extended, you're going to have your head ripped off. But I mean, are you going to buy this now? Are these value stocks now that they pulled back in the midst of a massive slowdown? So someone's saying Biddy UNR. I think you're getting carried away with the UNR concept here because Biddy. I don't think you get undercutting rallies in ETFs. Unless, because basically what this is it's Bitcoin in reverse, right? So if we look at GBTC here, then we can see that what's it doing? It's just kind of hanging out in a little base. That's all it's doing. So I don't really see any basis for thinking you have a viable undercut and rally. Maybe it works, but I don't use that. I don't think it's really that balanced. So just so you know, Mr. Staley. Anyways, but good question in any case. Let's see. Let's just keep going through this. What else? So we're looking at the semiconductors, the big stocks there. You see Intel is just a piece of garbage. But for the most part, they're trying to bounce back after getting clipped for a couple of days. So that looks normal to me. But a lot of these were double top shorts earlier this week, and even some of them even last week. But if we let's look at say railroads, so they're continuing to push higher. And if I look at, let's say, Canadian Pacific, that's approaching the prior highs, but you're coming straight up off the bottom, and you could just double top. The last time you broke out, coming straight up off the bottom, you failed, and then you undercut the lows down here, I think, of this structure here, and that set off the rally to the upside. So that's really where you would want to be buying. Some of the payment stocks, you can see Square are actually blocked now. Where is it? Well, it's really in no man's land. You got a gap move in global payments, but I'm certainly not going to chase that. I don't know if volume's only 17.6% above average, so not even enough for a viable gap up. MasterCard, you see where that is? I mean, that could roll back through the 200-day line and trigger a short. There's really nothing going on there. Paycom is pushing higher. That one's been a little bit stronger. They had a good earnings report, but it's a thinner name. But again, that's extended, so you're certainly not going to buy it here. Visa, like MasterCard, nothing really going on there. The oils, gas prices have come down, so that was the big driver for the CPI number. The core number as well came off. I'm not sure. The thing with oil is that if gas prices drop, then it causes other prices to drop as well, I believe. So it can have a positive effect that's deeper than, say, just the price of gas at the pump. But you look at a lot of these, and some of these look like it's possible they could play out as shorts in here. They're kind of down in the dumps and not really doing much anything. So after topping, a couple of months ago when everybody was saying that, oil is going to $175 a barrel, et cetera, not really anything there. So, I don't see anything that I have to do here in the oil patch. Mining stocks are acting better. So this is one area I have liked. And as I pointed out last week, you had a big undercut and rally and also a bottom fishing pocket pivot in the SLV a couple of weeks ago. And these are moving higher, obviously on the expectation that the Fed is going to slow down their rate increasing activities, which I don't think you can necessarily assume that. But right now the miners are moving, and PHYS is pushing higher. The Sprott Physical Silver Trust, where are we? Or Gold Trust and Silver Trust. We'll take a look at those in a second. But you can see all of these are moving. The time, though, to get in was, as I was talking about last week, along the lows here with some of these setups. But again, another group that's, yeah, it's looking good here. Maybe it's got more juice in it. I tend to like these names off the bottom. Goldfield's one of my favorite names. Here's the GLD. But what we were looking at in the GLD was, if you look at the weekly chart, you can see you actually had the you had an undercut and rally through this low here. I think it was 157.55, and I think what do we get to here? 158.02. I think it occurred in the PHYS. And yes, because you had a low here at 1323, and you hit a low here of 1321. So that, and you're right off the 200-day line as well, or the 40-week line on the weekly chart. Is that right? No, I'm wrong. I'm showing a. That's interesting. What would that translate into if that's the 200-day line, and that's the 200-week line? I guess on this particular chart, because all I did was change a daily chart to a weekly and kept the moving averages. That's kind of interesting. Anyways, maybe we should watch a 200-week moving average, huh?
It works on Bitcoin.
Yeah, so maybe it works with the metals as well. At least it certainly seems to be working with PHYS. Anyways, so pushing through these, let's see. You can see here, this was the pocket pivot in the SLV a couple of weeks ago. And then you had the pullback into the 20-day line, so that was an entry point right there that you could have used if you wanted to. I was actually doing some research on Mag Silver, and they have a new mine, Juanicipio. It's in central Mexico, which is the biggest silver producing region in the world. And this thing is running at 900 or 9,000 grams per ton. So there's 1 million grams in a metric tons, but they're running, the rates in the ore are running 9,000 grams per ton, which is huge. And these guys already almost equaled their full year silver production from last year. They've already equaled it almost in just the first quarter of this year. And they're just going to start spitting out cash like nobody's business. So I actually like this name. It's kind of thin, but I would watch this on a pullback. It may be worth trying to pick up on if you can catch it on a decent pullback, but you have to be opportunistic on this. Some other, what's this? HKLA down 5.6%. What's HK-LA? I don't, or is it just HKLA? I don't, not sure what you're talking about there. MATX, now that one I know. I don't see anything at Matson here. I mean, this stock's down. If it ran up to the 200-day line, maybe I'd look at it. But let's see if I have some of the. No, let's look at some of these. So, come on. There we go. Like I'm not going to do anything with that either. So, I mean, I don't really see anything here in terms of wanting to go after these as shorts. Let's see what else. Hong Kong to LA. Oh, Hong Kong to LA down 5.6%. Wow. Okay. Well, yeah, shipping rates have been coming down because you're working through some of the supply chain issues, but that's kind of old news at this point because these all topped a while ago, like 2 months ago. So nothing really new there in my view. If we look at what are the big stock NASDAQ names doing, you can see Google rallying to the top of its range. Amazon resistance at the 200-day line. Apple's pushing higher, but it looks like it's stalling a little bit today, so not really a huge upthrust day. Booking Holdings coming up off the lows. Cisco just kind of pushing higher, but nothing really going on there either. Intel down along the lows. Meta Platforms just stuck in a bear flag. So I just can't get too excited here on the long side. So Qualcomm, nothing there. Notice that was a short along the 200-day line. Tesla was a short along the 200-day line. Look at some of the cloud leaders. Most of these are in bear flag. Some of them are trying to push, like Bill.com is an infinite PE stock, but you're going to see that we've got a nice gap up here. Do you want to play it as a viable gap up? Good luck. I certainly wouldn't be looking to buy that here. Cloudflare pushing higher. So they got some of these infinite PE cloud names. CrowdStrike is cloud cybersecurity, and it came off when Fortinet got clocked last week. Datadog looking like almost like a shortable gap up type move here. But again, that's where a lot of these names are. You see that? So, is that a leader? I don't think so. If you're real nimble, I suppose you can try and trade it. I mean, I've done that with some of them. But for the most part, they're just coming up off the lows. This was actually one of them that I liked trading off the lows a few weeks ago, but notice how it's now gotten clocked after earnings, so down to the 20-day line. Maybe you could buy it there. Chris, you're making these points about the shippers, but the shippers topped 2 months ago, so they already saw what you're talking about, okay? So to cite it now as a reason to jump all over them on the short side, to me seems quite a bit late, because the market doesn't discount the past or even the present. It discounts the future. So because all of these shippers topped 2 months ago, that was already telling you that what you're seeing now in terms of the rates and everything was already in the works. So, nothing really new there. Anyways, so let me look at some of my other groups. Cybersecurity names, along with their, I mean, it's kind of an everything rally. Are you going to buy this one here? Do you want to play it as a viable gap up? Go for it. Let us know how you do. Qualys, this one shot higher yesterday, I think, on earnings. But again, I'm not seeing anything I can jump on the long side. Let's look at financials. What are they doing? Well, they're actually rallying because they think interest rates are coming down, when in fact, usually they rally when they think rates are going higher. But it's an everything rally, so they're pushing everything to the upside. Let's look at industrial metals. They're all pushing higher, obviously. Some of these, though, I liked last week. I might have talked about them. The little tight patterns along the lows, like Cleveland Cliffs, for example, was very tight in here, and you had a voodoo pullback into the 10 and the 20, and it's launched off of there. But at this point, where is it going? I don't know. But I'm certainly not going to buy it here. I might look at shorting it, depending on how it plays out. But it's kind of touch and go right now. We're up 542 on the Dow. Nasdaq's up 314. NDX is leading. I don't know. We'll see. But as far as I'm concerned, there's no rush to jump in on this. So I don't think anybody should be thinking that they have to start jumping into stocks now and everything. You have an all clear sign, because I think, as Chris pointed out, we're still well above the Fed's target range of 2%. Let's see here. What else? Industrial metals, okay. U.S. Steel at the 200-day line. 3M kind of in no man's land, coming up into these highs up here along this range. So you're right up in there. Maybe that turns into double top resistance. It's pretty furious this morning. So that immediate break on the downside, that was a great hit and run short sale type setup there, but that went away fast, and now they're trying to push them back again, and doing a pretty good job in some cases. So I'm looking at this sun run. It continues to push higher, 35.40. If we look at these solars, so we'll just pop down here. Array Technologies, look at that thing. It's gapping higher. All of these. Enphase, First Solar, but you get this little double top type action, so it makes me a little wary. So, and you look at something like SunPower, you're up along. You got to watch this high here, because that could come into play as a double top short entry. I might try to anticipate it here on the 620, but nothing really happening right now. This high over here on the left side would be at 25.24, you're at 25.60. So you're in that zone. So I definitely keep an eye on that one. Sunrun is in this. Let's push this guy out here. You got a high up here. It's not quite there. Get my crosshair out again. So you're not quite there, but you do have these peaks here, which are sitting just above So that's a possibility if it fails there. So I'd watch that. Otherwise, again, you had the big gap up move after Senator Joe Manchin announced that he was going to back the new bill, and that's what got these going. But again, where are you in the grand scheme of things? You're way down there. So, are these new leaders for our time? I don't think so. What else? I think I've covered everything I want to cover. Telecoms, Arista Networks has been pushing higher. Again, I don't see anything here. Travel names. Let's look at some. That has some of the airlines in there. What are they doing? You just look at these patterns. There's really nothing here at all. I remember, Chris, if you recall the bear market rally in the summer of 2000, you actually had stocks breaking out. You had some. I know Bill was all over Corning Glassworks at the time. You remember that? He wouldn't let anyone else buy it.
Yeah, I remember. Yeah.
So,
I mean, it looks like the Dow is not far from its 200-day moving average now, and the S&P and NASDAQ are following along. So that seems like it'd be a pretty textbook place of resistance for the market to then turn back down. But I mean, it seems almost too easy, like if it does that. But we have to remember that while the market often, it tends to fool the majority of the time, once in a while it does give a handout. It will give something that is very textbook. It's just not commonly that way. So, I mean, it could play out that way. It could play out a very nice little gift with the 200-day moving averages serving as resistance. We'll see.
Somebody asked thoughts on shorting cyber. Well, I don't really understand what that means. Thoughts? I mean, you either have a setup or you don't. So, where would you short it? If you were going to short it, I guess you could short it here and use the 200-day line as a covering guide. But really, the place to hit it maybe would have been a little higher. I don't know. I'd watch the 620. It looks like it's holding the 20 period. It might want to turn and go higher. So I wouldn't necessarily assume that you want to short it now, because you can see that it was up at 160. Now you're trading at 152. So you either hit it early. Like I said, you had a lot of things setting up right at the open that were shortable, and they worked really well. And boom, boom, and this is definitely one of them, because you came in. Well, let's see. No, it shot higher after the open, and then it rolled over within about a half hour, and that would have been a spot maybe to hit it. But that's tough to do, because you get a 620 cross here at about 154, 155, and now you're 152. So I don't know how optimal it is. But if you're asking me to endorse a short now, then you shouldn't be shorting if somebody has to tell you what to do. That's my basic rule. So people will email me or ask me questions either here or on my blog page. What do you think about shorting this here? Well, what's the setup? And what's your risk if it doesn't work? Where has it been trading today? What does it look like on the 620? But my view is, if somebody has to ask me how something is setting up and what my thoughts are about shorting something when it's pretty clear on the chart what it's doing, you shouldn't be shorting, because you don't know what you're doing. So, and if you have to ask somebody, to me, that just kind of exemplifies the fact that your skill level is not high enough yet. So be careful. But I mean, like I said, you can see what this is doing. But if you were going to short it, I mean, what's the basic rule at this point? You could short it here and use the 200-day line as your selling guide, but it's holding support here. Well, there we go. We dropped below the 20-period line. So, that would be the basic setup. So if you understand that, then it should be relatively easy to figure out. Anyways, I would suggest reading Short Selling with the O'Neill Disciples, as always. The standard reference work for short selling. Look at this. We're still going. I still want to buy the SQQQ in here, but it's not giving me anything yet. Let's see. Nope, nothing happening there. Let's see. UVXY getting pummeled. Well, you actually did. This is very interesting. You actually got a turn here around 960, but that was before the open. And now you're just trucking lower. But I noticed that you're pretty much flattening out on the MACD. That's interesting. We'll see what that ends up doing. That could it's possible it could turn, so I'd keep an eye on it. But I think that's basically what you're left to doing. If you're going to try to play anything, I think you have to take a contrarian position here and see if you can get away with shorting something into the rally, if it shows you a concrete short sale entry. Otherwise, I think most stocks are too extended to start jumping all over. Let's take a look at some other stuff here real quick. Some stocks I'm watching. Sunrun, they're going to push a little higher. Don't be surprised if this one doesn't double top. So it may head right back to the highs. But look at the volatility there. I mean, this thing opens near 36. You break below 34. So you basically get 7% out of it in 5 minutes. So, that kind of trade I'll take all day long. And then you get out of the way and then let it do its thing and see what happens here. So let's see some others that I'm keeping an eye on. CLF. That looks like it's ready to roll. SunPower, let's take a look at this now. It's pushing a little higher. I have some out here trying to push it on the double top because you push through this 25.60 level. That was a peak in the pre-open. Now we're starting, there we go, they're coming in. Just a pinch. Sunrun I already looked at. How about Uber? Uber looks interesting here because it is pushing right into the 200-day line. It's near the top of its range, and you can see where it is now. You actually had a 620 MACD cross here, but you never really got any extension on the downside, and it never really broke the 20-period line. So it's still hanging in there, but this might be one to stock. Just keep an eye on it. It's possible it could work. Anyways, what else? Let's see. Coinbase announced big losses yesterday, I think, or the day before. They're just hanging out in the base, so there's really nothing here. Interesting. Anyways, possible DT, JKS. I mean, well, I see what you're looking at here. You want to call this a double top, which I suppose you can. That's you do have sort of an axis line here. And this does look kind of head and shouldersy. So if you wanted to, I mean, a double top is or it isn't. Okay, there's no possible. This is a possible this or a possible that. Either it is or it isn't. So if you find a prior high, and this is an interesting high because it did try to push higher that day, and it ended up stalling and closing. Well, it looks like it's spinning all over the place. But now you're pushing back through that high because today, let's just go over here. It's always easier for me to use this. And they're still pushing solars. I don't know why. If the price of gas is coming down, does that mean energy is coming down, or do we all need to buy solar panels? I've looked into it. I don't really find it attractive. But in any case, all right. Your high here is 68.28. You hit an intraday high at 68.54. And now you're trading at 67.76. So obviously that triggered a short sale entry there. You would use this left side peak as your covering point. But, if you understand how that works, then why do you need to ask me? Or are you just stating it as a fact? That's more like it. In any case, you could play it that way. I think I'd like this high better, but you never know. It could run into resistance here. It's a possibility. Anyways, that's really all I'm looking at. What else can I pull out of my bag of tricks here?
I was just going to say, it's interesting. After the dot-com bust of 2000 and the markets went into that horrible correction, there was no QE discussed. I mean, what the Fed did was they basically hiked rates from mid-1999 to May of 2000 6 times, and that of course broke the back of the whole bubble completely. There was no QE to my recollection. I don't think QE was really something until late 2008. But what the Fed did was they started to reduce rates substantially from that point onward for the next couple of years. But that wasn't enough to rescue markets. They just kept tanking because I think there was so much excess built into the system from the dot-coms that it had to be unwound. And what I'm wondering is, in the current situation, we have more excess than ever. So in 2018, the Fed had to undo those rate hikes. They had to stop tightening the balance sheet, and then they rescued the markets by saying they're going to basically launch a new form of QE. That was in early 2019, and of course the markets rallied from there. I'm wondering if this time around we get, well, I guess the Fed can control the markets a lot more now than it seems they did in early 2000s. It didn't seem like they had QE as part of their war chest, that they could just come in willy-nilly, print loads of money and create a market, an artificial market bottom. Whereas this time, you know, if the markets were to replay a dot-com bust where the Nasdaq lost 78% of its value, I mean, I think this time it would be worse because we have more excess in the system, and I think that the Fed would then just simply start printing like crazy again to avert a collapse of the markets. But I'm just thinking this out. I'm talking out loud here, based on what I'm seeing in history, because the QE thing is really it seems like it was born of 2008, of the Great Collapse. Because it wasn't really talked about prior to that.
No, in fact, that it was considered to be irresponsible. But, you know, you had the $900 billion TARP bill, remember that? And everybody howled over that. But today they can punch through a $450 billion bill here, $350 billion there, $500 billion there. And before you know it, they're spending a couple of trillion that we don't have. And they just keep on doing it. So it's going to end at some point. But we'll see in any case.
Yeah.
So that's what's going on today. You know, I think it's mostly a day for stalkers. I'm definitely not chasing anything on the upside here. And that's pretty much it. So I went over a few things, but, you know, there's some basic ideas here to watch for. Watch for stocks moving up to prior price highs, into moving averages like Uber. You got this JKS. I'm not really a big fan of playing with Chinese solars these days. I kind of like, you know, watching run along this 35.24 left side peak over here, and maybe SunPower. These are still roughly infinite PE stocks. Watch to see if these give way, because they're just piling in. At some point, I think they're going to do what a lot of these semiconductors did yesterday and the day before. So, and you can see here, like AMD, a little bit of double top. They never quite got there, but NVIDIA, a little bit of a double top thing along these highs on the left side, and now coming in. So, you know, we'll see how this plays out. But it's very interesting to watch this play out, because if you look at individual stocks, they definitely blew the market to pieces. A lot of these stocks were just blown to pieces, and so now they're bouncing. And the bounce is, you know, when you're a $5 stock after being a $100 stock and you bounce $2.50, you're up 50%. So the moves look big, but we'll see where this carries. In any case, that's all I've got. You got anything else, Chris?
We're good over here.
All right. Anyways, thanks for showing up, everyone. We'll see where this goes. It's kind of touch and go, but, you know, I gave some suggestions, but I got to tell you, I'm not really hot to trot on doing too much right now. I am stocking the short side. I'll test it, but as you can see with something like a SunPower, it's just pushing a little bit against me, so not really any progress to be made there. So then you just go away and wait and see if it sets up later on. Maybe not today, maybe tomorrow, or maybe not even until next week. So anyways, thanks for showing up. We'll catch you guys next week. Take care.
So long, everyone.